What's up, YouTube? This is Thomas from Thomas Invest and thank you for watching. Today I want to talk about Abbvie, ticker symbol ABBV, a healthcare stock known for being a big dividend cash cow and also market leader with the medicine Humira. In this video I will show you what Abbvie does, some interesting facts coming from the 10K file and investor presentation, and in the second part I will talk about the fundamentals and if I'm going to buy Abbvie right now. In the last part, I will also show you some possible alternatives. If you're new to the channel, make sure to subscribe to get notified when I'm posting a video. I also appreciate an early thumbs up, which helps me within the YouTube algorithm. For now, let's dive into it. So, first of all, what does Abbvie do? On the website, Abbvie says, Abbvie discovers, develops and commercializes advanced therapies that have an impact on people's lives. Today, our passionate Abbvie team has approximately 48,000 employees working together to help patients around the world. In the most recent presentation there can be found a lot of interesting information. Since I'm not medical educated, I won't be talking too much in detail about these medicines, but just show you what they do. In this sheet we see that Abbvie is a diversified biopharmaceutical company, well positioned for sustainable growth. Their main cash cow is Humira by far. In this chart we see the net revenue in millions by type of medicine and also the specific product. Humira presents roughly 40% of the total net revenue in the US. The second place goes to Abbvie, with just a quarter of the net revenue of Humira. So this is showing us how important Humira is for this company. This could also be a concern because of the loss of exclusivity in 2023. But more on that in a moment. We see on the right that some products are growing double digits versus last year, so this comforts me a lot. But it has to be said that also some products are slowing down in growth. Abbvie is focusing on growing these products because in 2023 they will lose the exclusivity on Humira. Abbvie is already expecting a growth of Humira until 2023. In 2023 they expect a decline for Humira. And in 2024 they expect to be back on track with the growth. Time will tell what is going to happen here. In this sheet we see the expected growth of Ringvoq and Skyrizi for the coming years. It's expected to deliver 15 billion in revenue combined in 2025, based on the launch trajectory in their initial indications and robust phase 3 data. This comforts me a lot because Humira will not be the only top product they have according to this sheet in 2025. Another great thing in the presentation is that they claim to have a strong operating cash flow position, which will be used for growth, return of cash to shareholders and a really important one, rapid debt repayment. Another important thing for this pharmaceutical stock is to invest in R&D, to create this strong pipeline of new products. In the last part, they are going to support the dividend growth, which is important for many Abbvie investors. I really love to see the statements they make here. If we check the track record so far, Abbvie claims to have a compound annual growth rate of 13.5% since 2013 for the net revenue, an 18.8% adjusted EPS compound annual growth rate, and a 342% total shareholder return since 2013, and also a 225 quarterly dividend increase, all very impressive. For these numbers, it's a small step to some fundamental numbers, so let's dive into the fundamentals of the company, now that we know exactly what this company does and what the strengths are, but also what the weaknesses are. Before we check every fundamental aspect of the company, I first want to take a look at the stock price. The interesting thing here is that most stocks are down year to date because of several reasons. But if we take a look at the year to date chart, we see that Abbvie is up roughly 5% at the time of recording this video. Their most recent earnings on the 2nd of February were okay. They beat the EPS but misses on revenue. But the stock still managed to go up roughly 3.5%. Last couple of days it has come down a little bit. I must say I do own shares of Abbvie and I love it. I have a very good entry point and I'm roughly up 40% right now. But let's check if Abbvie would still be a good buy right now. So Abbvie is a 250 million market cap company with a PE ratio of roughly 22. This tells me immediately that Abbvie isn't really overvalued, so I like this a lot so far. A lot of companies are highly overvalued these days and not always showing the growth Abbvie shows. But we will discover the growth part later. But for now, the PE of 2022 is really great. You want this number to be around 20 for a normal growth company. When you have some big revenue growth, you might consider it around 25 to 30. And for slow growing companies, you want this number to be between 12 and 15. We see that Abbvie has an operating margin of almost 35% and a profit margin of roughly 20%. Both are great in my opinion, because you want this number to be above 10% at least. But I must say it also depends on the industry of the company is operating in. But for companies like Abbvie, this is really good. Another great thing is the return on equity of almost 87%. For a company this big, this is really amazing. Last year, Abbvie did 56 billion in revenue and had a quarterly revenue growth of 7.4% year over year. We can see the growth over the last years on the right. This is really going up steady and at a good pace for a company this big. Earlier in this video we talked about the use of the free cash flow and how they are going to pay down their debt. Here we see that Abbvie has a total debt of 80 billion. So they have a long way to go before they pay down this debt, but I'm not that concerned. Companies use debt to grow, and that's something Abbvie really does good. We saw with the revenue growth and the money they have invested very well. When we check the effectiveness of the management team, the cash flow is also used for paying dividends. And this is something Abbvie is really known for. In here we see that right now Abbvie has a 3.95% dividend yield and an annual payout of $5.46 a share. The payout ratio is sitting at 42%, which is really nice for companies like this. You want this number to be below 50%. It means the other 50% can be used for paying down debt, buy back shares, research and development, and do acquisitions, which are all important for Abbvie at this stage. When the payout ratio will be more than 50%, you might want to think twice before investing in this company, because it means all the value you will get is coming from the dividends and not from other parts of the company. So they do a really good job in here to keep it below 50%. The next thing is the 5-year growth rate, which is sitting at 17.7%, also really nice. You want the dividend to increase yearly, so you will receive more dividends every year with the same amount of shares. With the payout ratio being at these levels, they are capable of increasing the dividends in the coming years. They grew the dividends already for 8 years in a row. In here we see that you received $0.64 in dividends per quarter back in 2017. 5 years later you will receive $1.41 a quarter, more than double what you received 5 years ago with the same share. One of my concerns about the dividends are the shares outstanding, which increased since 2020. Probably this has to do with the Roni virus, but I'm not sure to be honest. Please let me know in the comments if you have something to say about this. But with increasing shares outstanding, more shares will be paid dividends to. So increasing shares means the amount of money going to dividends is increasing without increasing the dividend itself. So the payout ratio is also going to increase without increasing the amount of dividends, but just because the more shares will be needed to pay dividends to. For now, it seems that the shares outstanding is not going to increase in the coming years, but we will have to see what's going to happen here. The best thing they can do right now is buy back shares, so your shares become more valuable, because there are less shares to own in general. On the other hand, by decreasing shares outstanding, you will need to pay less amount of dividends in total to the shareholders. This could lead to increasing dividends more easily and also bringing the payout ratio down, or use the money to invest in paying down debt, acquisitions, or R&D. In my opinion, all great things to create value for the investor. With Humira's loss of exclusivity in 2023, there are competitors waiting to catch a piece of the market for this specific product. Besides the Humira product, there are a lot of pharma competitors for the other products. Abbvie has some big competitors, and in this part I want to show you just a few. I won't do a deep dive in these companies, but just show you a few competitors with the PE ratio, the annual growth in revenue, and the dividends they pay, to give you a better view of what other options are. First on the list is Amgen, a 130 billion market cap company with a PE ratio of roughly 22. The revenue is going up really nice and steady with a total of roughly 26 billion in 2021, so they do a really nice job there. Amgen pays a 3.4% dividend yield and an annual payout of $7.76 a share. Payout ratio is sitting at 41%. These numbers are similar to Abbvie's dividend scorecard. Amgen has a 5-year growth rate of 12% and increased the dividends for almost 10 years in a row. The 5-year growth rate of Abbvie is just a little bit higher, sitting almost at 80%. The next competitor is Gilead Science, a 77 billion market cap company with a PE ratio of 12.5, which is really low to be honest. The revenue really took a jump from 2014 until 2016, but went down afterwards. Since 2020, the revenue is growing again. Maybe this is something to do with the coronavirus, but I'm not sure. Gilead pays a 4.7% dividend yield of $2.92 a share. The dividend yield is definitely higher than Abbvie and Amgen, and the payout ratio is also lower, which is very nice, but the 5-year growth rate is lower. I think you will need to do some really good research on this company before buying, because I don't like the way the revenue went down a few years ago and went up during the start of the coronavirus. The last competitor I will show you is Moderna, a 65 billion market cap company with a PE ratio of just 9.8, again very low. The revenue is increasing every year, but we don't have a lot of data to work with, so I'm not that impressed to be honest. Right now, Moderna does not pay a dividend, so this is a big disadvantage comparing to the others. You will need to get all the growth from the capability of the management investments and the share buyback program. My conclusion is that Abbvie has some great numbers, and if you compare them to some competitors, there are some things you can discuss around. But for me, Abbvie is still the best option. A big concern will be the loss of exclusivity of Humira in 2023, but only time will tell us what is going to happen. A great thing we all see is the double-digit growth of the other products, and also expected growth of Ringvoq and Skyrizi. It's expected to do a combined revenue of 50 billion in 2025. This comforts me a lot. With the PE ratio being around 22, I think Abbvie is a buy for me. I really like the valuation right now based on the PE ratio, and the dividends are also at a solid level and increasing every year. If you compare them to some competitors, I think Abbvie does a great job with the dividends. Payout ratios are almost on the same level, but the 5-year growth rate with the dividends is definitely higher at Abbvie's. To sum it all up, I think Abbvie is a great buy at these prices, but there are some risks. For now, I think I will increase my position and wait for 2023 to see what happens with Humira. But remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I am not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a video. Thanks for watching and I will see you in my next video.